Hello everybody! As part of this month's newsletter, I've recorded another video for you to show you the current market action that has occurred over the last month and give you an update on some of my current trades and what I have been up to over the last month. But before I get started, I just need to remind you that I'm not licensed to provide any personal investment advice. This video and all the charts and trades I share with you are for illustrative purposes only, and I'm just showing you how I view the current market, and I'm sharing this with you. So if you're reading my newsletter, you would know that I'm just back from a 3-week trip to the USA. During the trip, I had a stopover in New York where the action never stops, and I visited some of the key stock market sites, including the flashing stock market board that's in Times Square, along with all the other multitude of electronic images that are flashing all around, as well as the New York Stock Exchange, which is on famous Wall Street, and along with the famous statue of the bull. And I must say, he is one big bull. Then it was on to the most iconic site of all, the World Trade Center Memorial Site. This site is a big reminder to all of us for many different reasons. For me, it was a major turning point in my trading career. The whole event itself is still very hard to fathom, and the year that it did happen was my first full-time year of trading. And I can tell you, I was way overexposed in the market and undertaking strategies that I would not even consider doing now. I felt numb on this day as I watched the footage on TV that morning, and I also knew it was D-Day for my trading. But I followed my trading rules, and that was to exit my trades when they drop at or below my stop loss. And every single trade that I had open was way beyond my stop loss, and I was undertaking strategies I would not even consider undertaking now, and heavily trading options and naked put options, which is definitely a no-no. A trading friend came over that day to support me, and after she left, I remember curling up in a ball on the lounge and wondering if it was all worth it. My whole year of trading profits down the drain, plus more. I nearly quit trading altogether, and I did not trade for about 3 weeks after that event. But that event opened my eyes to the fact that I had no portfolio heat, which is a strategy to manage your total open market risk in the market, and I was way overexposed. So if I was going to continue trading, something had to give. So everything changed for me after that day, and I moved away from the options market, mainly because I was very frustrated with the market makers on that day and not making a market and making it very difficult for me to exit my trades. They were just a bunch of cowboys, and I didn't want to deal with those cowboys anymore. So I moved into shares and CFDs, and CFDs became available shortly after that in 2002. And that was when I developed my medium-term daily trading system with very strong money management strategy, so that I was never going to be put in that position again that I was put in during 9/11. And I have to say that I've never looked back since. And sometimes as a trader, you will have an awakening moment, and you will either learn from that event and change, or you will give up. So I chose to learn and change after that event. So let's keep moving on now, because I want to share with you all about the market and what it's also been up to in the last month. On the screen here, I have a chart of the ASX 200. Now, the ASX 200 had been moving up quite nicely, making higher lows when we last left it. And it moved up quite nicely throughout February, but it really could not get past these highs over here. So it's built up some resistance at a point here where it's touched, broken through and failed to stay above, touched, near touched, getting close to touching, and again gets up near this point and fails dismally and falls and actually makes a lower low, breaking through that upward line. But it does manage to get some support, and it gets some support from a level that it's had support at as well throughout this churning phase. And it's moving up again now. So it's been a very frustrating couple of months. Now, I have been away through most of this period, and I did shut down majority of my trades with my daily system while I was traveling. And I'll show you those trades before I leave. But I look back at those trades now and think, boy, if I was trading through this period, I would be frustrated. So I'm sure some of you out there have been frustrated with the market during this time. But if we have a look now at the US market, and I'll just open up a chart of the S&P 500. So here's the S&P 500, and I've got it as a weekly chart. If you zoom out, you can see how the S&P 500 has had some support at this point and now has been getting resistance. And it's retested this resistance line right now. So if we zoom in, we can see how it's coming up and it's touching the same equal highs over here. But unlike the Aussie market, throughout February and part of March, it's had a phenomenal run. So if you are trading the US markets, you're probably enjoying this current move that's been going on. And now it's going to be very interesting to see what pans out. And if it can push through this resistance point, then it's a really healthy sign for the US markets. However, if it fails and it falls back down, then it's not so healthy a sign, and it will start to possibly churn sideways again. So it's going to be a very interesting week to see what pans out. If we look at the daily chart, you can see how it's come up to this point, tried to push through, failed, and it's touching it right now. And since recording this video, it may have already broken through or fallen back. So you can check that for yourself. Now I want to move on to some trades that I had shared with you in my last newsletter. I shared 3 trades that I had open. Now one of these trades was Kingsgate Consolidation, KCN, which is a gold stock. Now this share had been falling and had a downward line on the chart. It even looks like it's probably a downward channel. Oh no, not quite. There's not enough equal lows there. So it had been falling downward, and when it broke up with a nice white candle, it fell back and bounced. I will just zoom in a bit. You can see the arrow on the chart, and that day when I ran my market scan, this share came up in my scan. It met all my visual trading rules, so I entered into a CFD trade on this share, and that was on the 27th of January at $7.34. I'll just zoom back out a bit, and you can see how it moved up very nicely after I entered it and got near the resistance point that it's been at in the past, where it's touched here, and it goes back further back in these charts as well. You can see over here where it's had touches around that price point as well, which really confirms that point. Another touch over here. So I'll just come back in. So when it got up near that price point, it started to fall away. Now, I took off to the US on the 13th of February, which was a Monday. So on the Friday, I just automatically closed down the trades with my daily trading system because I was going to be away for a total of 3 weeks in a different time zone, and I just didn't know how often I would be able to get to the computer. So I shut this trade down on the 10th of February at $7.88. It did fall back eventually, and no doubt I would have exited with an aggressive exit strategy. If I had have let it run to my stop loss, I would have broken even on this trade because my entry price was around the same price point as my stop loss. And my stop loss is my worst case scenario in any trade. So this trade I held for a total of 14 days. I outlaid 20% margin on the trade, which gave me a 35% return on the margin amount and a 7% return on the total trade size. So that was just one of the trades I shared last newsletter and what's happened with this. And the next one is Tap Oil, another Australian stock. Now, this share I entered into on the 19th of January at 68 cents when it came up in my daily trading system, and it met all my trading rules. And it had this beautiful candle breaking upwards. And if we zoom out, you can see, like KCN, the share had been falling. It had a little bit of a recovery, but fell again. And my system didn't bring up any signals on this stock until I entered on the 19th of January. So when I entered on the 19th of January, it was a fabulous trade and it moved up very nicely. It was a very hard one to want to close down on the 10th of February because it had been moving so strongly. Unlike KCN, where it had hit a resistance point and was having a slight fall from it. So I exited this trade on the 10th of February at 83 cents because I was going away on holidays. If I had have continued to keep that trade open, it moved up higher and made new highs, but then eventually it did gap through my stop loss, and I would have been taken out at probably roughly the same price I sold at anyway. So the return would have been roughly the same. And this was when the big market drop happened in the Australian market, where we saw it drop back and make that lower low. And if you were trading, you probably would have had some of your stop losses hit on that day. So I held this trade for 22 days. It was 30% CFD margin. I made 73% on the margin amount I outlaid, and it was a 22% return on the total trade size. So moving along to the next trade, which was FKP. Now, I shared this trade with you also in last month's newsletter, and this share I entered into on the 13th of January at 57 cents. If we zoom out, this share had been falling quite heavily and strongly and started to build up support around this level here with a descending triangle. And when it broke through that descending triangle and my system gave me the first signal on the 13th of January with a nice long white candle and strong volume, I entered that trade. Now, every time you see the arrow on the chart, that was when my system gave me a signal. And when I run my scan that day, it came up in the report of my scan. So after I entered, I had another nice run on this trade, and it moved up nicely, and then it started zigzagging around. Now I exited like my other two trades on the 10th of February at 63 cents. If I didn't exit, my stop loss would eventually have taken me out over here, or I might have exited with my aggressive exit strategy because it was now showing a weakening of the trend. So I held this trade for a total of 28 trade days. It was a 20% margin CFD. I made 51% on the CFD margin and 10% on the total trade size. So that's the outcome of the last three trades that I shared with you. And you can see my main reason for exiting them is because I was leaving for a long holiday. And as part of my trading plan rules, if I'm going away for an extended period of time, I must close down my daily system trades if I know I cannot watch the market regularly. My weekly system trades I will leave open. So that's a question that you need to consider about what you would do when you go away on holidays with your trading. So since coming back from the market, I have opened up a few more trades over the last week, and I'd like to share two of these trades with you. So the first trade that I want to share with you is this one. And I'm not going to disclose the share name because this trade is still open and running. Now, this particular share had been in a downward channel, which you can see here. And it was clearly in a downward channel, and it broke above that downward channel with a nice gap, and my trading system bought it up that day. I liked what I saw, and so I entered on the 5th of March at $2.83. The share has fallen back a little bit and has now risen up and made new highs, and my stop loss has also moved up accordingly. So the line that you've been seeing underneath all these charts is my trailing stop loss line that I always put on once I've entered a trade, and I always have that stop set with my online CFD provider. Now the other purple line you're seeing on the chart is a 30-day moving average. Now the other trade that I've also opened over the last week is this one. Now this one is a share that's been going sideways for quite a period of time. You can see that it's falling very heavily from $10 all the way down to lows of $3. And there's support on the chart here. Now my long trading system will give me signals when the share is healthy on the long side. And there was a couple of signals that cropped up when the share did start to show signs of health, but then it failed. And you can see that I didn't get any signals on this share until just before it broke out. And then when it broke out, I got another signal, and it was a nice white candle with very strong volume. So I automatically entered in the market that day before the market closed, which was the 9th of March at $3.80. So this is only a fairly fresh trade, and the share's having a little bit of a pullback. But hopefully it will maintain above this support level here. And my trailing stop loss is sitting below this support level here. So if it fails and falls back through, I will be taken out of the trade. If it does move higher, then this stop loss will continue to move higher as well. So that's just an update of 2 trades that I have opened recently, and I will continue to keep you updated on their progress in the next newsletter. Now, before I finish up, I just want to share with you an exciting new deal that I've set up. I have now moved all my CFD trading to a company called City Index, and I've negotiated a very special deal for smart trading clients and people that are on my database. City Index is a world leader in CFD trading, and they established themselves in the UK in 1983 and have grown into one of the leading CFD providers in this country as well, offering a range of CFDs on many different world markets and many different types of instruments. Now, I just want to give you a quick overview of the deal that I've set up with City Index. The commission is $5 for trades less than $10,000 and then 0.08% thereafter. Now, that's very low commission. Currently, they're offering their clients $10 no matter what the trade size is. So if you do trade larger position sizes, you may prefer the $10 deal, and City Index said they're happy to honour that for you as well. So they will give you that choice where you can choose from the $5 and then 0.08% thereafter, or a flat $10 rate. Now, the other great part of this deal is that I've capped the GSLOs to 0.3%. Now, GSLOs are guaranteed stop loss orders, and they can be placed on the ASX 200 stocks. But not many CFD providers offer them. And my main CFD provider that I've been trading with for many years used to offer them, but they're now taking them away with their new platform. And as a trader of CFDs, GSLOs are very important to me and one of the main reasons why I trade CFDs over shares, because it guarantees my exit price on certain trades that I undertake. And I have specific trading rules where I will use a GSLO on a trade. Now, usually GSLOs can vary from 0.3% to up to 1% with City Index, but they have offered to cap this rate at 0.3% for my clients. Now, what you need to do is when you contact City Index, and in my newsletter and on my website, I have the contact details of who to contact. And if you call that person and mention Smart Trading, they will set you up an account with this deal. But you can also set up a demo account to start with and test out the platform. I have personally found the platform very, very easy to use, and there's great tutorials on their website that also teach you how to use it. Now, the other benefits of trading with City Index is they also offer the lowest overnight financing margin, which is plus or minus 2%, depending if you're long or short a trade. Most providers are plus or minus 2.5% or 3%. They also pay you interest when you open a short CFD trade. Some providers will charge you interest on short trades as well as long trades. They also have something called orders aware margining, that if you set a stop loss on certain trades at the time of your order, this will also reduce your margin further. There's about 25 stocks on the ASX that this can be done on, as well as some of the other world markets it can be done on as well. Plus, as I've already mentioned, it's a very simple trading platform that they have, and it's very easy to use. And don't forget, the market is going to be your biggest learning experience. And as you know, I've shared one of my major learning experiences with you in this video today. But you need to have a concise trading plan that's going to tell you what to do in all markets. And after the World Trade Center crash, I can tell you my trading plan changed after that day. And that day also set me up to handle the GFC when that came about in 2008. So I was set up and ready to trade that kind of market. And remember, if you need any help, visit my website, download my free report, and have a good look around. I have plenty of information on here, and you can also learn all about my trading systems and strategies through a course that I have called the Smart Trading Plan and System Development course. And if you have any questions, feel free to contact me. My contact details are in the Contact Us area of my website. So thanks for watching and listening, and goodbye for now.